Stakeholders in a business. Stakeholders are individuals or groups of individuals who have an interest in a business. They influence and are influenced by the performance of the business. These can be classified as internal stakeholders such as owners, directors, managers, and employees, and external stakeholders including customers, community, government, suppliers, and competitors. It is strongly recommended that a firm honors its responsibility to its internal stakeholders but also accepts the need to act responsibly towards external stakeholders. This means acting in a fair way towards customers, financiers, suppliers, and the community. It requires prompt payment of bills, manufacturing quality products, honest dealing, and reliability. It is important for a business to act in socially responsible manner. Socially responsible behavior clearly requires obeying the law and paying taxes, but it also means operating in an ethical way. Showing concern for the environment and the undertaking of philanthropic activity on behalf of the disadvantaged are examples of such behavior. Workers. The labor is the backbone for any business. They directly get affected by business decisions. They are paid salaries or wages. They should always be motivated as it will always increase their efficiency, raising productivity levels. Their jobs are protected through contract of employment so that they feel secured. In case of growth of business, workers might be affected positively or negatively. The employees enjoy being part of a business that is huge and successful. However, it is equally true that workers tend to show resistance to change as they have got used to a certain kind of environment and find it difficult to get adjusted in the new setup. This is what the employees experience when a firm merges with another business organization. Owners. Owners combine all the factors of production in order to operate a business. They are the risk bearers and the profit seekers. Their ultimate goal is to maximize profit by accelerating the growth of business and enjoying economies of scale. They want the image of their company to be enhanced and brand loyalty established. There are a growing number of businessmen who attach a lot of importance to ethical issues and want their firm to be recognized as a socially responsible organization. Customers. There is a well-known saying in business, "Customer is the king." Customers are extremely important to any business. In fact, they are the driving force. In today's competitive business world, a firm has to be market-oriented in order to be successful. Therefore, it is imperative that a business organization has sufficient amount of knowledge regarding the target audience habits so that their requirements can be fulfilled. A typical customer wants the highest possible quality at the lowest possible price. Needless to say, this may prove to be an uphill task for any manufacturer or seller. Government. In a mixed economy, it is essential to strike a balance between the authority of the government and the independence enjoyed by the private sector. The government affects business activity by accelerating the growth of firms through a variety of subsidies or retarding it through taxation. The government authorities pursue numerous objectives such as safeguarding consumers through consumer protection laws, protecting the rights of employees through labor laws, keeping a check on inflation and unemployment rates, ensuring social welfare and equal distribution of wealth, etc. Their ability to achieve all these objectives effectively is determined to a great extent by the performance of business organizations. For example, the amount generated in form of taxes will definitely increase as the business grows. This is especially true in case the government enforces a system based on progressive taxation in which the tax rate rises with an increase in income. Similarly, if the government decides to raise the minimum wage level, the cost of production for manufacturers is going to rise. Community. Business activity has a significant impact on the community. The pollution caused by production plants could affect everyone negatively and damage the reputation of the business organization as well. On the other hand, jobs created by businesses help raise the general standard of living. Technologically superior and socially helpful products such as electronics and medicines make a positive contribution towards the well-being of the community. Other stakeholder groups such as financial institutions, suppliers and managers also actively interact with business organizations in their respective capacities. Conflict of objectives. The aims of different stakeholders might be in conflict with each other since they are all seeking what is beneficial for them. That is why business organizations often find it challenging to satisfy all the stakeholders simultaneously. The owners want to maximize profits by keeping their costs low and enjoying economies of scale. The workers, on the other hand, might demand an increase in their pay level, obviously meaning a rise in costs for the owners. Businessmen usually pass these high costs to the customers by charging higher prices. This leads to another unavoidable conflict since a customer seeks highest possible quality at the lowest possible price. This situation puts the owners in a difficult spot as they would not like to disappoint the customers or the workers. Similarly, if maximization of profit is the ultimate objective, the business might not be able to give due importance to social costs arising in terms of pollution and other related issues. The government wishes to charge high taxes in order to generate revenue for arranging public and merit goods. However, high tax rates, particularly in case of progressive taxation, are known to have a disincentive effect on owners of businesses.